Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 25th of September, 2018, and we're about 3:50 p.m. Central Daylight Time. Interesting day. The silver market fell back, as you'll see, to the 18-day average, held it, made a run-up for a bunch of resistance points, and then backed off on them of nearly 10 cents. So I found that pretty interesting, but it's gaining on the gold, so that's fairly important. Is it a one-day event? You can't tell. You also can't make a lot of this out because tomorrow we get the FOMC announcement. When you get that, it can impact everything. And as you know, we're still going to hear President Trump tomorrow as he speaks about Iran and other, as he calls them, culprits. If you saw his speech today, it was interesting. If you saw how it started off with everybody pretty much laughing at him when he was bragging again about all he's done in 2 years, you're talking to, I'm not saying they're as equal, but they're heads of state, right? So they're equal, they're peers in that sense of the word. And it's one thing to play to an American audience. It plays a little different when you're talking to other heads of state. That's all I'm saying. And of course, we've got the Supreme Court drama starting on Thursday. They're already telling senators not to go anywhere for the weekend. They're going to get this vote done one way or the other, whatever the outcome is. So going to be a very interesting time. I only mention it because everything gets impacted by interest rates, and as you can see, you're still down in the bonds and notes. But in all fairness, the 10-year note at one point today was over a 7-year high. So interest rates are very, very high at this point. Look at the weekly chart of gold. You can't get away from the fact that on a closing basis on weeks, we're just going sideways all of a sudden. So that drama to the downside at 1161, when I still think that one of the reasons was Venezuela and Turkey selling gold to support their economies going on, as you saw the president, or if you don't know, the president put more sanctions today on Venezuela, in fact, on the First Lady of Venezuela and other ministers. Look at this action. This gets me excited. And the reason it does is from this type of action, you're either going to drop out of it and go down for these lows, or this is going to be a base and the market's going to try to work higher. The longer it goes sideways, the bigger the base. Now, if we take a look at this, you can see you've got a higher high and this low, not where the arrow is, but the day before, this outside day down's low, took out the low right here. So I don't see a trend just yet. I see a market with a higher high and a lower low. Then I'm looking at where the 18-day average of closes is. To me, the 18-day average of closes is very important. I define it, and if you're a regular viewer of these videos, you know I define it as the line in the sand. From there, the markets decide what to do. When they get under it and start trending, look at how long this market broke in price. It's a very important number, and the market's going sideways at it. And as it's going sideways, the range of the market is narrowing in, and you're seeing that from the Bollinger Bands. This is the type of event you look for. Remember when the markets went absolutely nutty in the stock market early in the year and the VIX shot up to 50? It was a much longer pattern, but a similar pattern, much, much longer. And that's when it got up and just caught the market and things went nuts. I'm not saying that will happen or won't happen. I'm saying I pay attention to that. In momentum, flat. So we have a market that's not trending. You got a higher high, a lower low. It is stuck at the 18-day average, and momentum has gone flat. When we come to GLD, the ETF, I now have, with today's action, lower highs, lower lows, countered by the market having upside momentum since it closed over the 18-day average. But the reality is it's like the futures, and momentum is flat. When we come to the gold miners, the market went up today, made its closest run for that upper Bollinger Band, got up as high as 1910. Yesterday's high was 1911, backed off. It is overbought here. It too is getting some of that sideways action, but not the narrowness that you're getting. This has more volatility to it, and that's why. What I've been looking for to happen was an opportunity in silver as the market peaked out at 84.92. It's back to 83.17. More important to me, it's under the 18-day moving average of closes, which, as I define it, puts the bias to the downside. You can also see so far, at least, you've got the lower highs, the lower lows on a closing basis. When you look at silver, I am not surprised that the market ran into the resistance and peaked out against it at 14.55. You are overbought. The trend is up, supports back at the 14.28.5 level, let's call it the 18-day average of closes. Even if you were to take out 14.18, the big question is, from there, can you get to the lower Bollinger Band? This market, too, is trying to do things, but it's not the sideways action of gold. In the copper market, they talk all the bearishness they want, but this is called Dr. Copper for a reason. And the world looks at copper as, if you will, it's our proxy for how our world economy is doing, or in some cases, how's China doing, because they consume about half the world's copper. And this market is in an uptrend. It has hit upside targets. If it ran, maybe it can get to the 100-day average. I mean, it could go higher, of course, but as a market technician, that's what I'd look for. Pullbacks in the market could happen at any point. You are overbought and you've hit upside targets. There's nothing bearish on the chart. It's ahead of itself in momentum. In the platinum market, you still have the pattern of higher lows, higher highs. Now, when we see sideways action with the red and the blue number, that's called the K and the D lines that make this up, I always look to see how many days in a row they're doing that. Today, both numbers over 80. If I go to let me go back to yesterday, right here. I want to get to Monday. Sometimes I get a delay on this handheld device, and that's what it's doing. Let me do it again. There's Monday. Both numbers over 80 and both over 80. So what we have here is called embedded. Embedded means that these numbers have gone sideways over that. If the market loses it, and the odds favor it will tonight, it means momentum to the upside is being lost, which would sort of figure in with it having 4 days in a row trying to be over the upper Bollinger Band, then slipping back, and now the market ahead of itself possibly. If you lose the embedded reading and it stays lost, prices might even retrace to the 18-day average of closes. The strongest of the metals, and today it's starting to show its first little weakness. It didn't go anywhere, but it has been on a tear to the upside, and that's palladium. And I know I've been pretty consistent here with it. You still have the embedded reading, and until that's lost, I say that pullbacks in the market are still where the pros are buying. In the dollar index, we've pointed out here that the lower Bollinger Band offered the support to the market. Then, because prices got under the 100-day average, the first resistance becomes that number. We have a market that's literally caught in between them. And if we look at the slow stochastic study, today both numbers are over 20. They were not yesterday. You don't have an embedded reading. You have an oversold market going into an FOMC meeting that should get very interesting very quickly for all of us. I want to remind you of two things. I'm going to have my live webinar, and that webinar is on Thursday at 1 p.m. There was some question from people because one part of the invite said 1:30 at the very bottom. That was my error. It's at 1 p.m. If you did not get your invite, it means that you're not on my mailing list. You better call into my staff at 866-973-2077. They can send you out the invite. It's first come, first serve. It fills. It's free. You're invited to bring your questions. I'll do my best. To me, a chart's a chart. So if you have a symbol for something, I like to put it on. I don't care what it is. It's a chart, and the theory should work the same way as a chartist. Then I write commentary. You might want to take a look at what we give you in that commentary. If you haven't had a free trial to it, I think maybe it's worth your time and effort to do so. It will include a lot of the things I do and also my audio comments twice a day. If you'd like to get all this, just give us a call at 866-973-2077 or go to our website at www.iraepstein.com. You'll see it right there. I'm Ira Epstein. You have a good day.